And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to my futures friends and family. It's time for the market prep. It's Monday, March the 6th. As always, our focus is on accurate context, good risk management, and remaining patient in our trading. Just a warning, it is a full moon today, whatever that means to you or to the markets. 9 o'clock this morning, we have factory orders. It's really the only thing we've got to look at today other than any talking feds that may decide to speak up. Speaking of talking feds, we have Chairman Powell speaking in front of Congress tomorrow and Wednesday, starting at 9 a.m. Central. Tomorrow, we've got wholesale inventories, the preliminary number, nothing all that impactful. Other than that, Wednesday, ADP employment report, perhaps a little foreshadowing of the employment situation or the unemployment numbers on Friday. Chairman Powell speaking again on Wednesday. We've got job opens and labor turnovers. We've also got international trade in goods and services, EIA petroleum status report, all on Wednesday. Following at the end of the day, 1 o'clock p.m. Central, the Beige Book. That's the warning shot that lets us know it's 2 weeks till the next FOMC meeting. It is a 2-day meeting. I think it's the 21st and the 22nd of March. Thursday, jobless claims as usual on Thursday. Again, perhaps some foreshadowing on what we've got ahead for us on unemployment day. We also have EIA natural gas report on Thursday, 9:30 Central, the usual time. And then, of course, the unemployment situation or unemployment numbers at 7:30 a.m. Central Time, following much later in the day with the Treasury statement at 1 p.m. Central. So what do we have going on? Well, we've got our equities that were lower this morning, looking now to the upside. We've got the end of earnings season for all intents and purposes. Market direction is now going to be, of course, focusing on fedspeak and employment this week. Investors seem to have, at least for now, accepted higher rates for longer, but any further disruption or further individual hikes could cause problems for longs. We may expect some volatility prior to the FOMC in 2 weeks. Canada, Japan, and Australia all hold monetary policies meetings this week, so we'll be keeping an eye on those, of course. Volatility may be expected in crude as well as the United Arab Emirates considers leaving OPEC. China lowered its growth target and rates. We see crude oil pushing to the downside on some of that information. So we've got a lot to kind of look at here this morning. VIX is up a little bit this morning, 1896, at least it was last I checked. Dollar index down very slightly at 104.46, and the yield on the 10-year back below 4 at 3.9%. As always, make sure that you hit that lucky like button, share, comment, questioning, feedback, and love are always welcome here on the Market Prep. We have group coaching today. Here's the link for that. That's at 12:30. And then we're going to be having Make Hogue Money at 2 o'clock, the afternoon session today. There's the links. Group coaching, you've got to come to the Zoom meeting if you want to participate, if you want to ask questions, if you want to be with us. 2 o'clock, Make Hogue Money. You can come to the Zoom meeting if you want to vote, but you don't have to. You can watch that on YouTube as well. Good morning, everyone. I've got ZK with the crowing. I'm not sure if that's rooster, but you're crowing anyway, so happy Monday to you, Shaw. Yeah, happy free pre-fed jibba jabba Monday. Yes. Good morning, my brother Rick. Love you. Timothy, Dr. VJ, Stephen, Scott saw, and he conquered. Brian, Dan Trader, good morning, everybody. Jason, good to see you. Grounds Hero, J-Man, Naztic, Alfred, Alejandro. Jerry is awake, and I hope John is too. Jay, good morning. Bill Phillips, John, Andy Bleed, Pete, Vince, my guy, good to see you. Terry, Kevin, good morning. Jason Lewis, Will, good morning, and happy Fedapalooza week, right? Haggle Matters, Sarah Hall, prayers and love to you all as always. Philip Shy T, good morning. Robert, JM, Anissa, Kevin Laffey, Saudi raised April's OSPs to Asia, signaling their belief in improving demand there, but modest China growth target overshadowing this in crude. Absolutely. Thank you for that good information, Mr. Laffey. Travis, good morning. Wicked volume in gas Vegas weather forecast spoiled the party. Yeah, the natural gas is just in a basically a kind of a free fall right now, isn't it? White House, good morning. Zerain, Cone, and JT. It's always a pleasure to see everybody, and always a pleasure to get back to business after hopefully a restful weekend for you. The market, the S&Ps, our equities markets on Friday were so set up for that big upside move, and I can't say 100% what I think is going to happen, but I do tend to have a little bit of connotation to what I'm saying. And on Friday, was really looking for a pretty decent up move, and we did get that move. We're going to see that on the charts very shortly. Looking for some more opportunities and some possibly bigger opportunities with perhaps a little bit more volatility this week. We've already seen the equities looking lower. They're currently looking higher. We're going to take a look at those here just now. Swapnel, it's good to see you. Let's take a look. We're going to start as we usually do on the market prep on the daily in the S&Ps. Let's check it out. So we had the February low, which everybody was viewing as critical. We looked below it a couple of times. We rejected on Thursday. We had a pretty decent reversal pattern on Thursday, looking for this market to continue this move to the upside on Friday. How good of a job did it do? Well, we didn't do great as far as volume is concerned, and it doesn't bother me when we don't bring in huge volume on upside days in the S&P futures. The volume tends to come in on the down days when everybody tries to jump in. So we didn't bring in huge volume. I think we were at 3.9 billion shares traded in New York, which is good, but not great. I'm calling that a C. The open interest increase that we had on Friday was approximately estimated to be about 11,000 contracts added. I'm giving that a B. So basically, I'm looking at a kind of a B minus C plus for the upside auction that really began on Thursday. Not necessarily seeing it as great, but not seeing it as hollow either. So overall, I'm going to give the upside health since this reversal pattern a B. The delta on Friday was positive approximately 7,100. We've been seeing some pretty big positive deltas up to this point. This indicates to me that this is probably more than just short time frame buyers just reaching up and jumping over each other to get long. You're going to see. I think you're going to see that in the profile as well. Let's go through the 30-minute chart here. Do we have any overnight inventory? If we do, it may be a little bit to the long side. Looks like we're going to be opening with a gap, which is good information. That gives us some reference. Remember gap rules. If we close the gap relatively early, that changes things. If we can't close the gap relatively early, we're going to be looking for opportunities to look for longs. But Unfortunately, this is going to further complicate things if we do get back into Friday's range. If we close the gap and show signs of acceptance back in the range from Friday, that is going to create some difficulties, perhaps in trade location. I don't think that that's going to be enough to change the market state back to the downside. Of course, ACH, anything can happen. If somebody says something the wrong way, we're always at risk of something like that happening. What I'll be looking for is if we can't close the gap outright, I'll be looking for opportunities to look for longs, buying on weaknesses. If we do come back into range, I think one of the more important levels that we're going to be looking at, and this is really a Dalton idea, is the afternoon pullback. That afternoon pullback takes us down to about 40.34. If we're going to continue to accept higher pricing, I think this is going to be one of our more important levels to focus on. Remember that, 40.34, if we do get into the range from yesterday. There are a couple other important levels for us to be looking at as well. We've got this 2650, another kind of stutter step on the way up. It was an area of a distribution of time and volume. If we were to get to point of control or this swing low early in the session down to 40.13, it's also an interesting level to look for. So unfortunately, if this market does not hold, if we do come back into the range from yesterday, there's going to be a lot of levels for us to kind of focus on, to look for possible opportunities for executions. On either side, really, I'm looking for the market to really hold Dalton's afternoon pullback low here, 40.34, to really continue to show acceptance of higher pricing. Take a look at the TPO chart from Friday. Multiple distributions. We're going to call this a double distribution trend day, but this is a trend day. Multiple distributions of time and volume on the way up. Here's that afternoon pullback low that I'm sure Mr. Dalton has been talking about, 40.34. There it is. All of the little TPOs, the single prints here, are considered excess below price. So if we get to them, they can be opportunities for us to take an execution. The point of control low here, really, it would kind of be a last-ditch effort for longs, which probably means it's the right one. Again, we're opening higher. We're opening with a gap. Our overnight high has occurred in the extended trading hour session. Whenever that happens, the market tends not to let that stay for very long. It's going to take out the overnight high in regular trading hours in relatively quick business. So we've got an overnight high, a recent high in the overnight. Market doesn't like that. Keep that in mind as well. So it's going to be, as if they aren't always, a kind of a challenging trading day. Here's our overnight. Where'd the market come to? Well, it came to one of the single prints, one of the thin areas of the profile and the volume profile before buyers came in and started pushing back higher. Relatively even bell curve. Market is looking for information. All right, let's take a look at crude oil, which is just about ready to open up. So wild day on Friday. Lots of volatility, lots of questions as to what the United Arab Emirates leaving OPEC would mean. What's China thinking? There's so many questions. The market really just kind of knee-jerked both directions, knee-jerked lower and closed higher. Does this change the current market state? I'm going with no. No, I don't believe that it does, even though, what was last week's weekly kickoff? 78.85. So we closed above that on Friday. But overall, the market is still largely, range bound. We're near the upper extreme. We added 4,800 in open interest on Friday, which is very difficult to read because we did gyrate quite a bit through the range that we had on Friday. So the OPEC scare, or whatever you want to call it, may bring some volatility, but no market state change here. We did have an increase in volume, of course. The market freaked out for a day. We added some open interest, 4,800, on an up move overall. Take a look at the 30. So here's what happened. Well, OPEC, what? They did what? Oh, well, we don't care, or what does that mean? Nobody knows. Overnight inventory is to the short side here. There's a lot of potential for repair in this. If you take a look at this volume profile, we're in range, we're in value. The visual areas that the market is going to be attracted to in this case could be this high volume node down here and the point of control up here. Those make perfect sense to me to look for an area to repair this area of the profile from Friday. There's a large area here of single TPOs. When the market opens inside of them, when there's high volume node here and a high volume node here, there's a tendency for the market to kind of reach both of those high volume nodes. So I'm looking at today as a probably as probably kind of a resting day, a day that the market is going to look for new opportunity, new information, and in doing so, it's going to rotate from low to high and high to low and low to high and high to low with a specific view or a specific eyeball, if you will, on the high volume nodes. Point of control up there would be a good spot. This lower area of distribution of time and volume has its own point of control. Point of control up here, point of control down here. Market trades to both. I'm going to stay patient. I'm going to wait for those extremes to look for opportunities. In the middle here, I think we're, just kind of a comfortable area. The market found a seat, somewhere to sit in this area. Of course, anything can happen. Take a look at the NASDAQ. Hello, Anne-Marie, Ainsley, JD. It's good to see everybody. Rusty Golfer, you're going to the gym. That impresses me this early. Nice job. Okay, well, here's the NASDAQ. Same situation. Reversal pattern on Thursday. Continuation to the upside on Friday. What didn't happen that did in the S&Ps? We only added a couple of hundred in open interest on Friday. Volume was okay. I'm giving the upside health in the NASDAQ a little bit slower grade than the S&Ps. I'm giving it a C because we didn't see a whole bunch of new buyers come in here. The delta was negative 1336, which would indicate the potential of longer-term buyers. Maybe the longer-term buyers met some shorter time frame shorts, which I'm sure is the case. So we've got our reversal, we've got continuation, we've got a gap to the upside. Take a look at the 30-minute chart. Okay, here's our gap. Looks like we're going to be gapping higher. It looks like we've got a naked point of control from somewhere way back when up here to check. But again, overnight recent highs tend not to be held. We're going to be opening with a gap. We take out the high. That's all we have to do. We've got weekly kickoff high just above, which remains at 12,423. Actually, I think it moved a little bit lower. Yes, 12,650 down to 12,423. The market is getting closer to actually breaking some sort of downside structure here, which I think we've already done to some degree. But this weekly kickoff high is a level that I think is going to be noticed and reacted to by longer time frame traders. I think in some regard with the open interest, even in the S&Ps, we've yet to have believers come into the upside here yet. I think that the speculators are still holding on to some hopes for continuation to the downside. Let's go back here to the S&Ps just for a minute. So one of the reasons why I was relatively confident that we were probably going to be putting in a low somewhere near the February low, which I pointed out last week, were these week highs. We got to the first week high on Friday. The next week high is up here, 40.90. The next week high is all the way up here at 41.45-ish. There's nothing finite in trading. I'm just going with zones here. So if we're going to go and take out those weak highs, we've got more upside possibility to come. And again, opening above like yesterday's range, there's some areas that we can pull back to look for opportunities. But if we can't close the gap, we're going to be looking for opportunities, possibly relatively early in the session, to look for continuation. All right, so we had another reversal pattern here last week in gold. The market has continued to push to the upside. I'm giving the upside health a B. So it's doing relatively well. We had higher volume and increase in open interest on Friday, 2,300. If you remember that table, if price is moving higher and volume is moving higher and open interest is increasing, that is a healthy upside auction and more likely to continue in that direction. Of course, we do have to keep one eye on the dollar when it comes to these metals and to the currencies. Well, what are we looking at today? Alrighty, so our settlement price, which was well below the finishing price of the day in gold, was 1854.60. We've opened now, would appear, with a gap that we've been unable to hold. We're holding short overnight inventory. I know it's kind of strange to open higher than the previous day's range and have overnight inventory to the short side. Kind of a strange feeling, kind of a strange idea, thought, whatever it is. But if we can't close the gap, the overnight shorts are going to be the first ones that are going to light the fire to the upside. Just trying to stay patient here now. If we can't close the gap, we're looking for opportunities to limit risk at the high of that gap. Take a look at the euro. Euro is coiling, wouldn't you say? Higher lows, lower highs. The apex right about here. This market could break out of either direction here just about any time. What do we do on Friday? We had a big jump in open interest on Friday. Volume was very low, but somebody in some time frame is looking for this market to break out of this. So that open interest increases on lower volume, range-bound trade. It's building energy. Excuse me. If you will, this market is coiling like a snake. What we don't want is for that snake to bite us. Here's the 30-minute chart. We've got a gap to the upside. We are pressing up against that upper trend line, which to me is kind of the stronger one. It goes a lot further back. This one just starts here. It does have 3 good points of contact. However, it is currently not in play. The gap that we put in is in play. The resistance we're seeing at this trend line are in play. What did we have here? We had a late spike on Friday, the end of the day. We pushed higher and closed without the ability for the market to be able to accept that level through time, and we've opened above the late spike. The rules are an opening above a late spike is indicative of acceptance of higher pricing. We got to start looking for opportunities to buy weakness. Even down to the base of the late spike here, we're still looking for opportunities to buy weakness. The base of that late spike is 106.36. What was Friday? IB high or low? No. Normal variation. Normal variation trading day. Yes. Neutral. Yes. But we put in the late spike end of the day, and we've opened above it with a gap. The idea is this is a higher probability of acceptance of higher pricing. Look at the week low we've got just above. We could go take that out anytime now. We could. Watch the dollar. Here's the 10-year. Bullish engulfing pattern. We know rates are going to go higher. Look how this market has continued this move lower, though. We lost 9,200 on Friday. Lost 9,200 in open interest. Do you think maybe there was a little bit of profit taking? You think? Volume was low. What's that mean for us today? Well, if we've lit a fire for profit taking or new longs, what's that take us to? Well, we've opened with a gap. We've got overnight inventory to the long side, looking confident, really, to the long side. Did we trade to this? No, we did not take out this naked point of control in regular trading hours. The market's still holding structure to the upside. I'm going to be looking for opportunities to buy weakness in this market. It almost hurts me to say that. But from what we're seeing higher lows, we're seeing higher highs, short time frame. It's going to be a challenge, I think, here today. Look at the TPO chart. Weak high, weak low, poor low on the low here, weak high, poor low. This market is just so difficult for me to read because there's always those weak highs and weak lows. It seems like every range has either a weak high or a weak low or both. So what do? Well, we've got the market with a gap. Well, I guess we look for opportunities to buy the market when it exhibits weakness above the high of Friday. So difficult to read this market. Now, wow, look at the natural gas. Oof. Look at Friday. We added 6,900 in open interest on good volume. That says that this market is actually presenting as a strong, healthy upside auction. But the way it looks now, it seems as though all we did on Friday was take all of the naysayers that were holding off on getting longs, put them in there on Friday, and now we are running them ragged on the way down. 6,900 in new contracts established on Friday. We trapped a whole bunch of longs up there, unfortunately. Did we go limit down on that? I don't know. Let's see here. Holy smokes, 13% lower. Not sure that there is a limit on that gas, is there? Let's take a look at the profile here. I don't have the overnight on this. Yeah, I wouldn't say that we've hit down the limit, at least during the regular trading hours. It's a good question, though. My goodness, this is quite the move. 13% lower. All right, here's I don't even know what to say about this. This market is such a nasty market. Here's the 30-minute. I mean, obviously we know we've got a gap. Last week's low is here. Weekly kickoff here. Naked point of control down here. I wouldn't even know what to do with this market. I've been at this for years. And this market just, while I enjoy watching it, scares the bejesus out of me to try and trade it. Here's the TPO chart. All right, here we go. Funny. Late spike, normal variation, extreme to the downside, double distribution to the upside, late spike, rejection, rejection, rejection. Kind of reminds me of my school days. All right. Oh, my goodness, this thing. They don't call it the Widowmaker for nothing, right? How about it? All right, so, well, we've got our tasks set out ahead of us for the trading day today, and hopefully with the market prep, you've got a little bit of an idea of some sort of accurate context. You know, some days, what was it on Big Lebowski? Some days you eat the bar, some days the bar eats you. Last Friday, we ate the bar. Yeah, last Friday was a good day. All you had to do was almost close your eyes and buy. But unfortunately, we're not going to be that way today. Good morning, Mr. Hoyt. Looking forward to seeing you tomorrow for the early session of Make Hogue Money. It's always a pleasure to have you with us. And let's take our deep breath. Don't forget group coaching today. Make Hogue Money 2 o'clock. And we'll look forward to seeing how this day plays out. It's going to be, as if they all are, a challenging trading day. Get out there and profit. Trade what you see, not what you're being told. And we'll see you later on. Have a good day. Bye now.